If you listen to the energy minister, he was very confident that don't worry about it. The demand's going to keep going up. Shale isn't enough to make up the difference. We're going to be just fine. Do you agree?
I think for the next 3 to 6 months, I agree. I mean, longer term, you gotta have a bit of a better plan. But look, I mean, shale is hitting some bottlenecks. We've seen prices in Midland falling off sharply relative to prices in other parts of the country or internationally because the Permian Basin is clogged up. The same thing happened in Western Canada with Alberta prices coming off hard. So clearly, there's a bit of a slowdown in domestic supply coming up. But obviously, you can't expect that to go on forever.
So you've taught me about this, Alex. Because I keep saying, what happened to shale? And you said, yeah, but there are problems because you have to actually move the oil after you get out of the ground. And there's things called pipelines, and we don't have enough of them.
Yeah, and then the discount from Midland to Houston, so where the bottlenecks are, I mean, it was as much as $9. It's been worse, but it's definitely an issue coming in the back end of this year. But to your point, this is what I don't understand about OPEC. We're tight. Right. We're tight, full stop. I mean, if you look at Venezuela and you look at potential sanctions on Iran, so how do they make the case they need to extend these cuts when the market's looking tight?
Well, I think first of all, you have to go back to the leader of the cartel, Saudi Arabia. And Saudi Arabia's got a pretty big fiscal hole. I mean, they've dropped $300 billion in FX reserves, which are roughly the government budget gap for the last 3 years. And that's a very sizable number. Their break-even is around $85 a barrel to keep the government in balance. So clearly they need more money, they want more money. So I'm not surprised the Saudis want it. The rest of the countries, however, have adjusted to a lower budget, of around $60 a barrel, right? So the rest of the countries may not necessarily want to have a higher price. It's more driven by Saudi Arabia. And then what's changed recently is Russia. I mean, Russia, which has a floating exchange rate, probably had a strong incentive to start increasing production, getting back some market share starting next year. Problem is now the rubles come off with the policy measures taken in D.C. The rubles started to come off, and now the Russians probably feel they got to get closer to the Saudis or to the rest of the cartel. And I think that's part of the reason why things are starting to move higher from here. And we believe we'll see $80 a barrel this quarter, partly fueled by that closer Russia-Saudi cooperation.